the got rent. Traded warriors, future bosses, all in a lane. Swing trade, day trades, long holes with feet. Michael G.
GM, everyone. Welcome to Weekend Workshop System Ideas. Let's fucking go. That is the Weekend Warriors theme tune, yes. Absolute banger. So, all right. Couple of things. I have got exactly an hour. I have to be finished right on the hour. I'm quite stuck for time today. Between traveling and having to meet a few people today. A few old friends. I need to go see that after. So, hard stop on the hour. So I want to get through this. If you've been here for previous weekend workshops, you'll know that they are absolutely the best part of your week. There could be nothing better. Yeah, guys, I can't turn the mic up. I said on daily levels that the microphone is up. It's just the MacBook microphone. So there's not much I can do other than have it at max fucking... That should be better. Hopefully that's better, because that is literally as good as we're going to get it. Anything else is going to be impossible. How is this? Better? Better. So, anyway, yeah. Traveling, don't have a mic. Just using the microphone off the laptop itself. And we'll be all good. So, today's workshop. If you've seen the other ones, I can't even remember if it's the 6th or the 7th one. I thought it was the 7th, maybe it's the 6th, I don't fucking know. But it's either the 6th or the 7th. I can go and check after. Alright, we've got an hour. GM. People saying their eardrums are smashed to pieces, but it's fine, it's just the change of sound, yeah? I think it's not like too loud, it's good, perfect. Alright, today's one's going to be fucking super G. It's going to be alpha filled. And it's all about system ideas. So I'm actually leaving this one a bit open. The previous ones, or some of them, they're all different. But many of the weeks I've done like a kind of 45-minute lesson, followed by some questions and answers. I think the system ideas actually opens itself up much more to answering good questions. So what I'm going to do right now is I'm going to open up the questions channel. Now let me be really clear. I know I say this every single time. Let me be really clear. I am not going to answer every question. I'm only going to answer questions that I think help what I'm trying to present here. So I don't want you to ask a question like, how do I build a system? That's not what this is about. Everyone here at this point should know how to build a system. If you don't, you're in white belt, don't worry. You'll get onto that very soon. This is how to actually form ideas for systems. So any question you have, as I go through the starting point will be about 10 minutes this time. So I'll go through about 10 minutes of overview of like the basics of systems. And from there you can ask me a question in here, all right? And again, I will skip any that I don't see deemed to be suitable, but hopefully that won't be an issue. Let's fucking go. So GM. System ideas. All right. Like I said a second ago, this workshop is going to be much more about how you think than what you do. It's really the core of every good system is a creative or somewhat unique idea. You don't have to be a fucking super genius who can predict the future, right? There's a big misconception about system ideas, and it's that somehow you need to know, like when you come up with the idea, you kind of have to like grade the idea there and then. That makes zero sense, but it's something I certainly did. You know, when you're like, I get questions all the time, Michael, I struggle to think of rules for a system. I struggle to think of ideas for systems. And I try and be as polite as possible, but that's impossible. What you actually have, if you think that you're struggling to have ideas for systems, what you actually have is you have an assumption that things you're thinking right now don't work. I mean, literally every single person who's been past day 25 of boot camp of white belt, every single one of you knows how to build an infinite number of systems. You could very easily go and pick rule A, rule B, rule C, and just build another system. It's super easy, right? The thing that holds people back is actually a lack of confidence in their own ability to choose a system, which makes sense because at the start, you obviously know the least you're going to know in your entire career as a trader, and you're only going to get better as time goes on. But when you first start out, you think, it's easy to think, oh, my system ideas must be shit, right? Or they must just not work. Because, you know, how could somebody who's brand new with not much experience build a good system or know a good system? That's actually not true. You never know what's going to be the one that works. There's a reason why I teach the simple basics in bootcamp. There's a reason why I encourage you guys to, you know, build a entry, stop loss, take profit, right? Just 3 rules. So you're just taking one rule for entry. That rule might be a break of structure, right? If you're taking a trend trade, a breakout trade. One rule for stop loss. That might be put your stop loss below the swing low. And then one rule for take profit. Your take profit might be exit on a market structure break on the same time frame, right? And that's the kind of stuff I looked at when I first started building systems. And then I went all the way as deep as you could go. And I'm going to go through today. Like I have a list of literally hundreds of system ideas that I've just written in notes over the years. Many of them I've never even tried. And I came all the way back after all that complexity, back into understanding that simple is better. Now, it doesn't mean that simple, like that system I mentioned, break a structure, swing low, market structure break, just works. The point is, if you don't test your ideas, you're never going to know if you're able to build good systems. So anybody now, if I said, I'm going to give you 10 grand tomorrow, if you come up with 10 system ideas, you would come up with 10 system ideas, right? So the first thing you need to let go, it's actually a psychological thing, you need to let go of this limiting belief that somehow you can't think creatively or that you can't build systems. That's complete nonsense. The second thing is you then need to be very, very, very careful that when you're building systems and when you're going through the system idea, exploration phase, where you're thinking of ideas and you're trying to develop systems, that you don't fall into the same trap that many people fall into with all areas of life, which is shiny object syndrome, where you come up with a system idea, then you come up with another system idea, then you come up with another system idea, and each time you come up with one, you're excited, you're like, holy shit, this is cool, I thought about the market this way, maybe I want to test that. And then you think of another idea, and then you realize, I never even went back and tested the first one. So if you get an idea, test it. And try to test it as quickly as possible. The amount of time between your decision or the amount of time, between your idea and your decision to execute, that's a clear measure of your potential for success. How quickly after forming an idea can you actually go and execute it? This is what Tate calls speed. Don't just write down loads of system ideas and never go back to them. That's why I've got fucking 100 in my notes, because I didn't used to, and it's just every note I've ever written about systems from when I first started. And after I'd already got it to like 100 and I'd tested maybe 10 of them, I realized, oh, this is not the correct way. I need to either stop and make my way through all of the 90 I haven't done, or I need to put in a rule that every new system idea that comes into my head, I must first go and test it. And it doesn't mean that you have to go and do 100 back tests every single time, but you must just get into the habit of having an idea and immediately actioning it. Maybe that just means you go and do 10, right? So as soon as the system idea comes into your head, You're like, okay, I've got an idea for how to trade reversals. I think if I use this entry rule, this stop loss rule, this take profit rule, that could be a good starting point. Now let's go. Open up a Google Sheet, get started, boom, do 10. That should only take you less than an hour, generally, especially once you've got experience with testing. And whether you go on to do the 100 after that, I strongly suggest you do, because also you want to make sure your brain is accustomed to completing tasks once it starts them. But getting those 10 done will make you more disciplined. It will stop you from just endlessly thinking of ideas and never actually putting them into action. Because I look at my notes and I look at all the notes on my phone about all the system ideas, and there could be a system in there that's just the fucking sickest system, super high EV, really profitable. That could be the one. And I don't even know, because I literally don't think I'll have enough time in the rest of my trading career to test all of them. Partly because there's not much need to, right? You know, the further on you go in your career, you start to figure out what style of trader you are. And I'll explain it in a certain way too. I've loads of ideas of systems here, and I'm going to tell you about many of them today. But like, some of them are not the style that I want to trade, right? You know, I talk a lot about inch wide, mile deep, where if you want to be the best trend trader you can be, you should really focus very deeply on trends and try and angle all your systems and all your testing towards trends. It could be trends on different time frames, trends using different indicators, trends using different types of price action, trends on, you know, day trading, swing trading, position trading, all of that. But try and keep it in the realm of the overall concept that you're trying to go deep on. So let's say I was just wanting to be purely a trend trader, then all the ideas for mean reversion systems on my sheet, on my notes, should be put to the side. And if you start with that in mind, you're going to be in a better place. Now, it's also important to know at this point, if you're a white belt, you don't know what style of trader you are yet. If you're a blue belt, you're in the testing and discovery phase, where I actually recommend that you try lots of different things. And so this broad strokes here, these are broadly how I categorize the 5 types of system. A trend system, this is super simple. Everyone knows what a trend is. It's where the market goes up or down, higher highs and higher lows, or lower highs and lower lows. Classic, everyone knows a trend, right? Doesn't matter what time frame, a trend is a trend. Mean reversion takes many forms. That can be a range, like you've seen in white belt, a classic horizontal range where you trade from range high to range low, maybe use a false breakout, maybe use something else. Or it can be really any phase of the market that is not trending. Like by definition, everything else could be classed as a mean reversion. So everything here, so in this part here where the market was making a low and a high and then higher lows, but also lower highs. So it wasn't a range because it wasn't respecting a range high and a range low. It was actually compressing. They're the ones you don't want to trade, first of all. But that's technically mean reversion. Also, if you just look at like a super low time frame and you look at a move, well, it doesn't have to be a low time frame. It can be any time frame. Any move like this, where the market goes up and comes all the way back, that's mean reversion. This is not a trend. Even though the market goes higher after, that's irrelevant. That's besides the point. If the market goes all the way up and all the way back down, back to where it began, and retraces, more than 75% in any given move, that's mean reversion. The goal of that would be, is there an opportunity to short up here and close it down here? And I'm not saying there is. That's not one that you would want to necessarily short, but the idea being the move that retraces, this move, pumps up, fails to go higher, comes all the way back, that's mean reversion. Right? Just that little phase there. And this applies on all time frames. If you zoom out to a daily, same thing applies, right? If you're looking at, actually I should go to lessons. Here we go. All right. You can use this in case I need to use replay mode. Perfect example over here. This is a 4-day move where you have a 1-day pump and 3 days of retracement. That's mean reversion. That's not a trend. That is a move that retraces fully. That's mean reversion. Doesn't have to go down below. Doesn't have to bounce to new highs. Just that part. Does it go back to the origin of the impulse? It's mean reverting. It's going back to where it began. And where are we at here? Here we go. Reversal. So, reversal is technically part of mean reversion, because by definition, the mean reversion part, like the reversal itself, if you see a market going from a uptrend into a downtrend, it will be going up, it will be going up, it will be going up, and then at some point it will do this, right? And then it will go down and down and down. Let's just say, for example, that's how it goes. This part in here, this kind of transition phase where you have the structure break, you have the failure to go back up, and then you break down lower. The downtrend begins proper over here. The uptrend obviously was over there. And so this transition phase is mean reversion because the pump comes all the way back and then below, and then the dump comes all the way back up as well. So it's not trending lower, it's not trending higher. In that part, it is in a consolidation. It is in a mean reverting kind of frame, but you can separate those into specific reversal trades, because a reversal is a very specific type of trend and mean reversion kind of crossover. A reversal is where you're saying this is not going to go down anymore, or this is not going to go up anymore, and it's going to go in the opposite direction. Now, it can absolutely, do this. This is, if you're looking at reversals, distribution also falls into this. This part of the market here was a mean reversion, and it was a Wyckoff distribution. If you go to a 4-hour chart, you can see it pretty well. I've shown this before. Pretty good Wyckoff, right? The trend really ended there. You had a nice strong move up, and then from that point, it sort of grinded higher and had an up thrust, and then it had shows of weakness. All of this part here will be classed as mean reversion because the pump comes all the way back, the pump comes all the way back, and then eventually after it breaks structure and then it goes lower, then the downtrend begins proper. So that in-between phase is where you're trying to identify, is the market going to reverse? Because if it's going to reverse, it's going to go back to where it began and possibly even lower. And that's why you're looking at it and thinking about it in terms of, okay, if this does reverse, I know where it's going. It's going to go back down, or in the other side, it's going to go back up. Next, database. Database trades are where you're using things like open interest or any data. Could be CVD, could be funding rates, although I'm not a massive fan of using them for systems. It could be delta, order flow, right, using footprint charts. Also the volume profile that you see me use a lot, that would fall under database because you're using volume essentially. And anything that falls into that where you're combining price action, which is always your key. Price action is always your base because you need to know where to put your stop loss, especially, and your entry. But you're coupling that with some kind of data analysis to identify levels or the magnitude of a trend or a divergence in the case of something like open interest or liquidations to allow the market to go the opposite way. Database trades generally are best used for reversals or mean reversion. They can be used for continuation of trades. That's what you would call harmony. The thing about the harmony though is I'm quite a big believer in divergences, and I'm not a massive believer in harmony. If you've seen the lessons, you'll know what this means. But divergence is where price is doing one thing, but the data is doing another. So, classic example, price is going up, but volume is declining. The indication of that and the assumption of that would be if price is rising and the trend is supposed to be strong, then why is volume getting lower? Why is there less and less trading as it rises? That would be the market telling you that there's fewer and fewer people willing to trade at those higher prices. If the market goes up from 60 to 70, and at 60 it has high volume, and at 65 it has half the volume, and at 68 it has a third of the volume that it originally had at 60, and at 70 it's only got 20% of the volume, what's that telling you? It's telling you really clearly the market is not looking to trade there. It's not looking to do business there. And that's a clear way. You can literally look at that and say, okay, what's the market telling us? It's probably telling us that price is it's too expensive, right? The market considers this new price to be too expensive at the moment. Quite often this happens because price moves there quickly. If Bitcoin goes from 60K to 70K in 2 days, it's quite reasonable to expect that people would say, okay, this thing that was 60K 2 days ago, am I willing to pay 70K for it? No, probably not. Let's wait and see. Maybe I'm actually more inclined to sell. And that's how often those moves can reverse. That's why as well, when you hear me talk about fast pumps in a downtrend not being a good thing, that's why. That's a big reason why. That's why throughout this last phase where we've had very fast moves, like after Bitcoin topped in March, it bottomed in May, so about 6 weeks, and then about a week of consolidation, and then about 4 or 5 days. So in 4 or 5 days, it went from 62 to 72, 10K price increase really quickly. So obviously we know what that means. It's going to induce people to get long. It's going to bring in FOMO. But most importantly, if you see volume declining on the way on that move by any great degree, and you may not see it on this one, I haven't pre-picked this, but when you see volume that is lower near the highs, and certainly you can see in this phase here that volume in general is very low compared to previous times that it was up at these areas, right? So after all of these times over here, from the highs going into the top and the bounces and the peaks and the dumps and the peaks, you can see that all these other times there was higher volume. Then suddenly we have super low volume. So the participation level is lower. And because it went there in a fast move, you can indicate and you can assume that traders may not be willing to pay that higher price. And if it's not able to go higher, it's going to go back down to where there is people willing to trade until volume spikes again. Same thing here. Again, a relatively fast move in about a week or 10 days, fully retraced, and so on and so on and so on. Same thing happens on the downside. When it goes down too far, too fast, you can see reversals as well. Last type is a scenario or event-based system. So this can be, a scenario is where you're defining a study you want to do for the market. This is something you'll cover in purple belt. So certainly not something you need to worry about at white belt. And at blue belt, it's okay to start, looking into it and thinking about it. But again, it's not massively important. But the gist of that is, if you're looking at a scenario, you're not looking at just where is price in relation to whatever chart pattern or indicator or moving average or whatever. What you're actually looking at is, what is price doing statistically? So if Monday is green, what's most likely to happen on Tuesday? So you go, instead of doing 100 back tests on, RSI, bullish divergence and break a structure, whatever, standard rules, technical analysis rules, you say, I'm going to go and look at the last 100 Mondays and Tuesdays. So if Monday is red, what is Tuesday? If Monday is green, what is Tuesday? And then you can say, okay, after you've done that, you should be able to get a set of data and say, if Monday is red over the last 100 Mondays, there is a 53% chance that Tuesday will be green or whatever. And then you can take that further and you can say, what is the magnitude? So if you find out, first of all, that say Monday is red, and that means that Tuesday is 53% likely to be green, okay, cool. But by how much? So how much did Monday go down? So what was Monday's price move percentage-wise? So from open to close, Monday was down 5%, let's say. What was Tuesday? Because if you just say binary, was it green or red, that doesn't really tell you what you could do with a trade. Because if Monday was down 5% and Tuesday was green, but it was only up 1%, that's not as interesting or impactful as if Monday went down 5% and Tuesday went up 6%. That's like a full retrace. And the second option, obviously, would be the one that you would be more inclined to trade because there's more price movement. So that's a scenario. And again, there are infinite scenarios. You can say, if you have 3 red daily candles in a row, what is more likely to happen on the 4th day, and the 5th, and the 6th, and the 7th? You can extend it on as much as you want. You'll start to see as I go through this lesson that there are literally an infinite number of ways you can test the market. So remember, first of all, what you're trying to achieve, what style of trader you're trying to be, or what, at least what style are you testing at the moment. It doesn't have to be the thing that you choose to be forever. Don't worry about that. But what are you going to focus on at the moment or for the next X number of days, weeks, months? And align it with that. If you are if you're a position trader, meaning you trade over multiple weeks or months, it's not really that important for you to know what happens on Tuesday if Monday is red. If you're a day trader, it's really good to know what happens on Tuesday if Monday is red, because it's exactly that type of trader who will be able to benefit from it. Even a swing trader really couldn't. If you typically hold your trades for 1 or 2 weeks, and Monday is red, and you know statistically that Tuesday is more likely to be green, and your data tells you that there's actually a good chance that if it goes down 5%, it could bounce 4% or whatever, that's not really going to help you as a swing trader, because that trade will probably play out within a single day. But what you can do as a swing trader is say, what if we have 3 red weeks in a row? Or 3 green weeks in a row? What's more likely to happen? What happens if Bitcoin has 2 consecutive inside week candles? And I'll go and show some of these. So everything I'm saying right now is literally a system idea. So you should be noting this shit down if you want. I'll actually kind of preface this. I'm going to just fire hose you and blast so many system ideas at you that your brains are going to break. In the next hour or 35 minutes, you're going to get an endless amount of ideas. But I want you to stop before you start getting all excited. You can't test them all. Don't fall into the shiny object syndrome like I mentioned. Make sure that you're disciplined with it. You can take notes, of course, write the things down, sure, but like what I said before, the goal is not to just have more systems endlessly. The goal is not just to test more endlessly. The goal is to make it very specific. So hopefully throughout this lesson, you'll hear or see something that really sticks with you. Go off, go inch wide, mile deep on that one. Right? Don't feel like you have to test every single possible permutation all the time, always over and over and over. So that one I just mentioned. What happens if there are 2 consecutive inside weeks on BTC? This is very rare, by the way. It's actually going to be hard to find one, I think. 2 consecutive inside weeks. 2 consecutive inside weeks. That one is 1. That's not even 1 there. 2 consecutive, 2 consecutive, 2 consecutive. Bum, 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 bum. Maybe I'll do it with days. You know, it'd be easier and quicker to find with days because I want to just explain the concept. So an inside day looks like this. All right, and here we have an example. So you have a candle which has a high and a low. The very next candle stays within the range of the previous candle. You notice it doesn't take the highs, it doesn't take the lows. The very next candle after that, so this is the second one, so we're saying 2 inside days. The next one, so the third candle in total, must do the same. And now you have 2 consecutive inside days. So you have your first one, or your initial candle, then your first inside day, your second inside day. What you're looking to then study as a scenario is what happens next. And you don't have to have a system built. You don't have to have an idea. You can have an assumption. I think that the assumption, by the way, with inside candles is that it's building energy for a big move. It doesn't tell you what direction, but it's building energy for a big move. What happens here? It actually has a 4th inside day. Then on the 5th day, we break. So we take out the lows and we take out the highs of the previous day. And then it's built up energy and it blasts higher. And then it sweeps lower, and then we get a trend up. I'll explain the logic behind this. When the market has moved, especially when it's been a pretty big move, and then it goes into a phase where it's the complete opposite. So nice 3 big expansive candles, and then 5 days or 4 days of compression. It's building energy. Now, this one went up. It won't always go up. It doesn't tell you if it's going to go up or down. But a really good way to look at this is when that impulsive breakout move came, to see it then reverse and sweep and come all the way back and take out those lows is something you should be looking for, and it's definitely something you can look at and test. Simple logic. In a market, you have a big move. Doesn't matter what direction. You then get a compression. When it breaks from compression, people will start to push in long. The other side of the compression has not been hit. It's quite easy for it to go to the other side. And that's where you can see both sides getting swept. That's quite common. And the same thing applies in both directions, whether it's a long or a short. So again, that's just an example there. And then another type of scenario, this is more related to data itself. This is something I haven't really talked about before. So something like, which altcoins are most driven by spot versus futures? Right, these type of questions. Which altcoins are more driven by spot than futures? How would you determine that? Tell me in the chat. Which altcoins, let's say you picked the top 50 alts, which alts are more driven by spot than futures? How? Gonna close this, by the way, because I won't have time and I don't want to disappoint anyone. I'll try to get through as many good questions as I can. Funding rate, a cash sol ETH. No, I wasn't asking for the specific coins. I was saying, like, how would you find it out? Liquidity, spot premium, CVD spot, CVDs, volume, CVD, none, don't know, maybe open interest, GM. Altcoins that are more driven by spot would make those altcoins easier to move in general. Difference between spot and perps. If spot is higher than perps, more spot buying. Spot premium, small cap, no futures available. Well, yeah, if there's no futures available, then it's a null point. Then there's only spot. This is for, like, let's say Avalanche. Let's say you took Avalanche and you took Phantom. How could you determine which one of those is more driven by spot than futures? The way you would do it is by cross-referencing the data. So you want to look at, first of all, volume, daily volume, and weekly, monthly. So pick a time frame. Let's say in the past 30 days, between Phantom and Avalanche, which has been driven more by spot and which has been driven more by futures. So the first thing you would do is you would look at the aggregate volume of spot and the aggregate volume of futures. That just means literally looking at the total volume traded. You can find this on CoinGecko. You can find it through TradingView if you aggregate charts. You're comparing, just like Stanley says, you're comparing the size of the spot market to the size of the futures market. But also make sure you have a time frame for it, because this will change every day. You should be looking at it across a specific time series. It could be 30 days, it could be 2 months, 3 months, 6 months, doesn't matter. It's up to you. A great time to do this would be in periods like we're in right now, where these markets are going down, right? So if you looked at AVAX, for example, AVAX has been going down along with the rest of the market. It's been going down for the past 6 months. If you analyzed and said, okay, let's just take March, April, May, June, July, and August. 6 months. March, April, May, June, July, August. And you individually looked at those months and you said, what was the total volume on spot in March? What was the total volume on futures in March? And then it's not so much about the number in volume, it's about the ratio. Let's say there was 50-50, or let's say there was 70-30 futures to spot ratio on Avalanche in March. April was the same, May was 60-40, June was 50-50, August was 30-70. So you have 30% on futures, 70% on spot. What's that telling you? That would be exactly what you would want to see after a downtrend if you're looking to find a bottom, because going from a very futures dominated market, which could be indicating more short-term leverage driven speculation, right back down to a more spot dominated market would tell you what? Potentially we're seeing a bottom, potentially we're seeing the futures short-term leverage has been flushed out, potentially we're seeing capitulation, potentially we're seeing a spot accumulation. These are all things that you could be looking at that could be useful to help you find the next best trend. This one is best for comparing coins against each other. If you're looking at and want to ask yourself, which altcoins are going to be best in the next part of the bull market? We talked about this on altcoin requests on Thursday. One of the ways you could do it is, looking at the pullbacks that they've had. Like I showed, Pepe is a really good structure, whereas something like Render is not quite as good. But if you were looking at, let's say you narrowed down your list of alts to 10 or 15, you could analyze each of them and say, I would like to find the altcoin that has moved from being futures dominated near the top to spot dominated, and the one that has the best ratio. That in theory would be the coin that has the best potential of a strong rally, because there's more spot activity, there's less futures activity, and you could be seeing accumulation. So that's one idea. Next, sticking with scenario and events. And by the way, this is also dipping in now to specific systems and ideas of mine. So all these things I'm talking about are from my list of notes or from systems I've tested or built. Another idea would be if Mondays are the best day to fade the first move of the week. That was my exact note I wrote in my notes app when I thought of it. And then I expanded on it and I went and tested it. So the back test would be, which days of the week have the most reliable breakouts overall? Very simple, right? So what do you have to do there? You have to define what a breakout is. That's quite simple. It must, let's say we're just looking at long, just to keep it simple. It has to move above a swing high or a swing low, but let's say a swing high. Sorry, I should keep it straight. It must move above a swing high and close. That's a breakout, right? Versus many of these days that we see where you see just it tries to go up, there's a big wick, and it closes back below. A false breakout. So you know false breakouts happen a lot, yeah? We've all seen this. False breakouts are more and more common as the years go on because there's more and more people trying to do the exact same thing of catching every breakout. So false breakouts, if you want to avoid them, wouldn't it be good to know, let's just say for Bitcoin, wouldn't it be great to know which day of the week does Bitcoin tend to have a breakout that holds? I can tell you one, not saying this is the best, but I can tell you that late Friday breakouts historically are very reliable, which is slightly counterintuitive because a lot of times people think you don't want to be going long going into the weekend, but as long as it's Friday, that can be front running of a bullish following week. Over the weekend, you typically then get just directionless, sideways, quiet chop, and then continuation the following week. Friday is more reliable than Tuesday, for example. It's certainly more reliable than Saturday or Sunday. Saturday and Sunday are typically the 2 days where you're going to have the least reliable breakouts. So more likely to be a false breakout, more likely to retrace and reverse. But you can do this. You can literally go. Bitcoin chart goes back to fucking 2010, right? You can go and look for every single day of Bitcoin's existence if you want. Or you just pick the last, let's say 5 years, 6 years, whatever. You know, if you're analyzing many of these historical trends on Bitcoin, historical moves on Bitcoin, all the data is relevant. But when you're looking at scenario analysis, keeping it more recent certainly does help. But if you're doing a higher time frame system that requires more of a look back, that's totally fine as well. Don't worry about the fact, like I get the question, and I know, like, you know, is Bitcoin in 2014 worth looking at? Because, you know, in 2014 you had these big crazy trends and Bitcoin was really, really small market cap and it was really low and it moved a lot and it doesn't really look like this anymore. Does that mean it's not relevant? It doesn't mean it's not relevant, no. Would the assumption be that the more recent data is more relevant? Sure. But also, no part of the past predicts the future anyway. The reason why backtesting works, the reason why statistical analysis works, the reason why algorithmic quantitative trading strategies are so universally used and profitable these days is because all we have, me, you, and the best quants in the world, doesn't matter who it is, all have the same data to go off. Now, obviously, the quants and the professional firms and the billion-dollar hedge funds, they'll have more data because they'll do more scraping and they'll have more bigger teams and they'll have whole, system set up to do it. But everyone's looking at the same data. And the reason why backtesting works, not that it definitely translates into live trading, as you guys know, but the reason why backtesting is a good proxy for live trading is because everybody else does it. And so if everybody has seen, well, not everybody, right? But if sufficient number of people have seen that there is a real statistical, pattern in the past, they're more likely to trade that pattern when it comes up again in the future. And I don't mean chart pattern, I mean pattern of behavior. If, like we said before, if a bullish Monday more often than not leads to a bearish Tuesday, guess what? many people are going to trade that way on a Tuesday if we get a bullish Monday, because they're crunching the numbers. If you're not running the numbers, someone else is. Now, next. Well, actually, let me see. So that's scenario and event based. So scenario, like I mentioned, if this happens on Monday, what happens on Tuesday? Or if Monday and Tuesday and Wednesday are green, what happens on Thursday and Friday, etc., etc., etc. We did it before on the challenge. If the low of the week is on a Monday, how often does that happen? Like, how often is the low of the week put in on a Monday, meaning we bottom on Monday and we rally the rest of the week? Another one that I mentioned in trading analysis the other day, how reliable are weekend highs and lows? So if the weekly high forms on the weekend, meaning the lowest price or the highest price for the week comes at the weekend, what are the probabilities that that level gets defended or does not get hit the following week? I can tell you from anecdotally and my testing that weekend highs and lows are the weakest, pun intended. And so if I see, for example, it happened a few weeks ago. In fact, we can just show it on the charts. Right, we had a here. So this was a big red week. Red Monday, Tuesday, Wednesday, Thursday, Friday. Then Saturday it went lower. Then Sunday it went lower. And guess what? Sunday closed with a bounce, but right away on Monday we flipped straight down through it. A lot of people bet on the bottom because we had a big bearish week and it sort of bounced into the weekly close and be like, oh, that could be it. Let's rally next week. Nuked on Monday. Why? Because weekend lows and weekend highs are typically not reliable. Sean Johns, if you looked at the data, the traders who backtest more profitable than the non-backtesting traders. Absolutely 100% correct. This goes to my point of a lesson I did before where I said, this thing about 90% of traders lose money, it's bullshit. 90% of people lose money in the markets. 90% of people don't actually trade properly though. They're just trading on emotions. They're not using systems. They don't even know what backtesting is. They've never even considered position sizing or risk management. If you do the things, if you adopt the habits and processes of a professional, your odds increase exponentially of being one of those winning traders. Specific ideas and systems. Okay, we're going through some of those at the moment. And then how to think creatively. And then I'll do some questions. How to think creatively is kind of something I'll go along with. But there's really two parts to this. And there's a caveat. So first of all, you don't need